All right, here's the question and answer session for May 15th on an unlisted YouTube channel. So let me take a look at IVC is a question. When do I think they'll start laying off the fund managers and whatnot? I've said after Labor Day, I think that IVZ goes through a major transition. If they don't, they're already near their bottom. I don't, maybe they lose another buck or two short term. But, I don't think it's a bad idea to sell the stock, then sell a cash secured put. And if you have margin, a covered call at the same time. But, I don't think if you wanted to change your IVZ strategy, I think the way to do it is just sell the stock and then immediately sell a put. And that way you're collecting some money. But their dividend is still 7%, so you got to beat the dividend. So I don't know. I mean, if you like the company long term, which I do, I think you just stay put at this point. I don't think there's much point selling near the bottom, even if it's not the absolute bottom. But will it drop another dollar or two? Well, if the market gets hit, probably, right? And then if you get those waves of 401k selling off, I don't know that you have to be invested in it at this point, but I do like it long term. So how you play the short term is really dependent on you. It's not bad to have cash on hand. You can always make your money back somewhere else, or you buy it back later. And if you don't want to take the chance that management does the right thing, then sell it. I'm pretty sure management will do the right thing, but I don't have a big position in it. So, that's where I think we are on IVZ. So GDX is $36. Yeah, I think selling $40 covered calls to January is not a bad idea. And then you can buy them back if there's a stock market correction. If you just want to trade it a little bit, or if you just want to say, I'm going to ride this through, you can do any of those things. But I do think there's a pullback coming in GDX. I do still think middle to upper 20s, 26, 27, 25, maybe 28, right in there. It's probably where we see it for a hot minute. And that's why I think selling the covered calls is a pretty good idea. No, you don't want to sell puts on GDX. Okay, so people ask about, well, should I sell put? Should I sell put? You only sell puts on corrections, period. Now, you can pick your time frame of the correction, 4-hour chart, 1-day chart, 1-day chart in a bull market. GDX is clearly in a bull market, right? So if we pull up the GDX chart, right, what you see is that on the daily chart, money flow is not oversold, right? If this got way down here, you could probably sell some puts. Or take a look at RSI. I mean, RSI is practically overbought. You want this down here. So very simple strategy on selling puts. You need RSI and money flow index and shaken to be down, or 2 or 3 of those to be down here. They need to be in oversold. You don't sell puts unless what you're investing in is oversold. Okay, pretty straightforward. I think KMI gets back into the 20s, not too I don't know why you'd ask about KMI, about Kinder Morgan getting privatized. They're not anywhere close to being able to do that. With all the market cap out there, they can go through a big merger, but I don't think Richard Kinder is going to want to do it until the stock is well into the 20s, pushing 30. The fact that they were able to raise their dividend at all should tell you how strong they're getting. They've cut their debt by a ton. If we pull this up over on Y charts, capital expenditures coming down, 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 which is what I told you we wanted. Dividends going up, which is what we wanted. CapEx versus revenue, that's good, right? We want them to spend less of their revenue on CapEx. I mean, that's just a spectacular chart the last 5 years. That's what we want. That's awesome. Cash flow to CapEx, right? That's basically the inverse of that other chart. These should really be close to each other. Maybe like that. This is just a standard layout from Y charts. Institutions are selling off. Richard Kinder's basically buying them. Where is... There you go. Total long-term debt been coming down from 43 billion down to 34 billion. And remember, those pipelines are financed against the cash flows. So this is just going to keep coming down. The value of their assets pretty high, and they're not getting a lot of respect, right? I mean, this is trading at book value. I mean, this is cheap. This is going back into the 20s. It was already starting to move in the direction I said a couple of years ago it would move in, while it pays a big fat dividend. And then ultimately at the end, there'll be a transaction. So I think from 15-ish to 20-ish, despite the market, this is one that I would sell puts on. I have a 1-year contract with Y chart, so I have to keep them through right around Thanksgiving. So, I mean, they have their uses. I could use Stock Rover to do the same thing. So by then, I'll really understand how to use Stock Rover. For those of you who signed up for Stock Rover, I will tell you, it is an outstanding system. There's just so much to learn. Where things are, how to use it. This is a screen that I was just using. These are all companies that are probably going to cut their dividend, right? The utilities I'm not so sure about, but I've got 7 REITs that I think are all going to cut their dividend. That's, an article. Wells Fargo is in such bad shape that they're talking about merging with Goldman Sachs, right? I mean, who would have thought that Wells Fargo would have had such a bad decade that at this point they're just throwing up their hands and saying, shit, we're going to have to merge with Goldman Sachs. Now, if that happens, I want to own Goldman Sachs. So that is actually a company, that we should be a little bit more aware of. As evil as they are, and they're evil, and there's no freaking doubt about it. They're good evil. There's such a thing, right? So they're in trouble too. But the merger of Goldman Sachs and Wells Fargo, that just completely changes their footprint. The synergies would probably be massive. They get to throw out one of the dividends. I tell you what, I think there's a point where I'd own Goldman Sachs. Down around 100 maybe. I really think that they'll set a new low. I'd be shocked if they don't. So all these watch lists over here, a lot of them are pre-populated, right? So it comes with tons of watch lists. And there's more that if you go to their library, there's more. These are just the ones that they pre-populate for you. And then, the ones at the bottom here are things that I've been building. So these bottom 5 or 6 are ones that I built. Then here's a VSL. This is the expanded VSL. I'm going to do a growth focus. I'm going to break everything into the same thing that I have on the spread. Excuse me. on a spreadsheet, I'll have those built right in here so I can look at them 20 or 30 at a time against an index or something. So yeah, I'll tell you, Stock Rover, and if you really want to look for ideas, the ability to screen and sort and switch to different metrics, is just outstanding. So with dividends, it doesn't usually come with Altman Z-score and some of the other stuff. I added the FFO for the REITs, and Altman Z is a measure of financial stability. It's basically if your number is below 2, then you have a pretty high. The tutorials are good. You just got to spend the time doing them. Right? It's like anything else. You got to spend the time learning. I always turn the speed up on anything on YouTube to 1.25. And then you can't be distracted, though, because I will actually be building charts, listening to a webinar, and playing poker all at the same time. And sometimes my poker game really suffers. But if you focus on those webinars at 1.25 speed on YouTube, these webinars are webinars are just on YouTube like mine, right? Once they're done, they're just archived. And then you can look at them. You can take classes. One of the things I will tell you is I am having a call on Wednesday with a woman who studied at the feet of the guy who invented MACD. She worked for him for 30 years. And she is a dynamite technical trader. And I think to entice her to come on board, because I can't afford to pay her too much, I think I'm going to have her build a technical trading class. And we will introduce it through my services first at some discounted rate, $299. And then she'll spend time in our chat room over on Fundamental Trends 4 or 5 days a week for a few hours. So I think that's the plan. Is if she wants to do it, she's retired, but she's looking for something to do, then I'll give her a percentage of my revenues. So I'm going to do everything I can to get her on board. Plus, she's kind of a life coach, so I think that's nice. Keep us emotionally grounded, and she's got good financial planning ideas, which, I do think by the end of next year I'm going to have a hedge fund up and running. I had that call last night, and I just think that I need to keep bringing in really good people. The quant trader, he doesn't have time to spend with us, but he is providing me with a lot of data and trading ideas. So, while we're not going to get him in the chat room over at Fundamental Trends, some of his ideas are filtering in through me. Okay, let's just get to the last two charts here. So we have been looking at IWM, and I think so. I drew this arc. I think it's clear that IWM is trying to turn over, and I put in some Fibonacci. These vertical lines are Fibonacci's based on time. And it's weird because I've never used them before, but I just thought I'd add them. And the way that the lines line up, they really coincided with market peaks. It's just really like this one. This one kind of blew my mind. I mean, this very accurately predicted a top here. So as we get over here, let me see if I can. What I want to do is make that, let's see. I'll show you kind of there you go, this is what I want. All right, so I just was drawing different lines. And so one of the Fibonacci time zones ends next Friday, which I thought was really interesting. So this actually should be there. When you use a shorter time frame, your lines get skewed a little bit. It looks like, and what's S&P? What's Russell's back up to 124. This yellow line is some resistance, and if it breaks through, probably goes all the way up till maybe early Friday, based on the just basically the time zone that's in effect. But here's the thing. These are just kind of ideas of what can happen, right? Because all these other lines, these checked lines in here, you see there's just this big glut in here. That means that's a battle zone area. So you can either climb the wall of worry or start building momentum down. And then you get to where the different support levels are spread out and you start falling through them. And as you have more momentum, you just keep falling through them. So this is the battle zone from about 131-ish down to about, right in here, 120-ish, 116-ish, right in there. This is where the battle zone ends. And you start to see the breakdown of the support levels as the lines get further and further apart and they're less dense. I mean, there's spots where you can see the lines overlap. Right, and right here, this 120 and 119 area is pretty strong. Then boom, and then boom, 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 and then it goes, right? So if this doesn't turn over on Monday, then it probably goes all the way up for most of the week. But if it hits this area again, which it sniffed yesterday, and turns over, and it starts to go down through next week, and then it could really take off to the downside because of this narrow time zone. This is like bad news can be hitting. So I think the risk to the downside is we get bad news, right? You're starting to see the narrative flow bad, and we'll see. But if there's enough hopium left, you can see it run up here. And then this ends up being, oops, wrong one. Then maybe this ends up being like this, right? Either way, I think that this is clearly arcing over. This is the giveaway, right? Right, this box right here. There is three tops right there. If you look at a shorter term chart, you can see them. See? That's it. It wouldn't let it go up. This would be I forget what that pattern's called. But that's, I think, probably the local top, local meaning short term. And now we just have to figure out how fast does it fall. I don't know. But I do think that the target, zoom out to a weekly chart, look at this Fibonacci level, and this one here, that's option expiration. So maybe this goes all the way to there. That goes there. I mean, this is setting up for either another puff on the cigar, or a pretty sharp drop. Now look at the length here. A lot more downside than upside. It's a bad equation. So that's, not quite a reverse head and shoulders. I think that would, I don't know, I'd have to look at it again. I recognize it. I know that it's a negative, a bear market indicator. I just forget what the name is. So one of the things I mentioned on the fundamental trends chat this morning was that, so I've been experimenting with different types of technical analysis a long time. I respect it. I don't think that any one is magical. Like I said, I gravitate towards the money flows. Lately, because of the changes in volume, I really like MFI. But I think Chaikin for longer term position traders is probably more valuable. I've never really applied it for day trading or anything like that. Some swing trading, because when Chaikin money flow goes negative, that means that either the stock's coming down or it's going to chop sideways, one or the other. It never goes up. So that's a nice thing to know. If you know the stock's not going to go up and it's going to be dead money for a while or go down, you might as well get rid of it, right? So I talked about I've been doing technical analysis 25 years, and you see me bounce around from one to the other. I haven't done any point and figure for you or anything. I might bring a guy on that I know, and maybe he'll get a kick out of showing you point and figure one day in a Zoom meeting. And it's a good system, right? You know, Dorsey Wright uses it. Dorsey Wright's been pretty successful. So, you know, this is the chart the same chart we just looked at here. But I think that when you start playing with your own charts and different methods, what you come to understand is that when a lot of different technical methodologies overlap or line up and are basically saying the same thing, then you really ought to pay attention. When different technical methods of analysis are in conflict, that's where you have to just fall back to your fundamentals and say, okay, do I really want to be involved with this right now? Again, the one thing I would say about Elliott Wave here, which again is trying to measure psychology, is that we're in this wave 4 area, we think, and wave 4s just bounce around until they decide which way to go. That's why Elliott Wave is much more effective early in the cycle than late, I think, or at least in that 4th wave period, which is what it looks like we're in for this off the bottom. But, you know, Elliott Wave is saying, hey, we might run all the way up to, 3,100 on the S&P, or we could fall to 2,000. Well, at that point, you say, since it's not giving a real clear signal, the upside is 200 points, but the downside is 800. How involved do you want to be with that equation, right? Just risk management. So let's see, any other questions? So the money I make on being an affiliate, just to be real clear, I make, if you buy the full trading package, the Pro Plus with TradingView, I get like $7. I don't even care if you use my affiliate link. I just think that TradingView is something you should probably have, because it's just seems to be more functional than anything I've seen in a brokerage. I've got TD accounts, I got Interactive Broker accounts, and I have Schwab accounts, and I like this better. Plus, I don't want to keep something on all 3 places, right? I just keep everything here. Plus, you can see it. By the way, I changed the setting. I didn't have this on sharing, and I apologize for that. If you're a member, if you have a TradingView account, even the free one, you can just, all my links, you can just copy them now. And then you can play with the chart however you want to. So you'll have the setup. So I apologize. I had this toggled the wrong way before. So now if you have the link, you can view it and copy it. Before you couldn't copy it. You could only, see these pages, right? And they were static. But now you can copy this, and then you can start using whatever method of technicals you want to use. Whatever looks good for you. I do think the Fibonacci's are something that we're going to use more and more of, because they just coincide over and over and over and over and over again. Where these Fibonacci's overlap, that seems to be pretty powerful. And again, the thing to really keep your eye on is where there's a whole bunch of them, that's a battle zone. And then as you get out above or below, those are your breakouts or your breakdowns. Pretty simple, right? So somebody's asking about Tesla. So you may have saw me on Twitter the other day talking about how Musk really is just a jerk. I think there's a very good possibility, and I haven't drawn on this enough, very good possibility it gets down to 450 quickly. And I think that upper 300s is very possible, if not probable. You'd have to see something really bad with the company happen to get it back down to that 200 area. These lines are just based on market structure. Again, I'm just, because I'm going to have all the Fibonacci lines on here, the solid lines are going to be mine. Good enough. So if you're going to draw the fib, now a thing to understand about, did I have the right one? Yes. Fib retracement. So from this bottom, this is a weekly chart. It's all we really need unless you're day trading. To the top, so there's your base. Then you do your retracements, your extensions. Make sure your lines match. All the way back up. And all the way back down. Oh, did I mess it up? Oh, what happened? Ah. Fib retracement. Up. Back down. Back to where it was. So you're starting to see some of your levels, right? And then you'll take a more recent, right? More recent low to a more recent high. Say, okay, where are we starting to see some overlap? Then you take your extensions and you can measure from the low to the high. You can measure from the high to the high. Oops, didn't do it. Got to keep grabbing it. Go from high to high. Right? Start seeing, oh wow, there's a lot of things that could develop there. You know, you go from low to low. You could do more recent ones. So you maybe go from this low to this low. You know, you go from low to high. And that's how you build these. And you just see where they start overlapping. A shorter time frame will make it easier. Back all the way down. You know, so you do more recent ones too, but you know, you start seeing, okay, where's the battle zone? So right in here, that's I think that first buy area. But if it breaks through here, it plunks down in here pretty quick. Something to keep in mind. I'm telling you that the traders at Reddit have an impact on some of these stocks because they pick out certain stocks and you literally get thousands of these sweaty little millennial traders. I'm sorry, I'm teasing. Not really. And they're trying to pump these stocks up because there's kind of a feedback loop. They just keep buying calls, buy calls, buy calls, and the market makers have to buy the stock. At some point, some of the big traders say enough is enough. And then all the other traders follow. So that's why this was able to go parabolic and then crash. Parabolic and then I think crash. Is they're manipulating it. If it was hedge funds doing this in concert with each other, they'd all go to jail or at least get a fine. But because they're just sitting in the Reddit chat room, and there's thousands of them, Wall Street Bets is a subreddit, and there's articles out there. Go read the Bloomberg and some other pieces have been written about the Reddit traders. And I monitor that thread now because I want to see if there's anything that they're pounding. And Tesla is one of their babies. So now they're all up here. They're all going to sell their calls. They're probably buying puts on the backside. They're going to push it all the way back down. Somewhere in here. And maybe, maybe in here. Right? That looks like some levels right there. But it's going to come down. So the problem is that if you're not day trading or in the know about what this big group is doing, Tesla's hard. Tesla's hard to trade. I think the strategy here is just let it come all the way back down. Maybe it only gets to here. This level, see how this slope is? This level right in here, where all these overlaps are, it makes sense to me that that could be a good spot to buy. Or at least start selling puts in the middle 500s. I think my thought is I just wait until I see these indicators get oversold, especially on the daily chart, but hopefully on the weekly chart in a month or so. And then you can buy Tesla or ARK, right? Yeah. So, or wait for Tesla to sink and then buy ARK. I think that's a great strategy. And I got to think that Kathy Wood is paying attention to Reddit at this point. Yeah, I almost feel like calling or sending her an email and asking, hey, you understand what's going on with Reddit with the Tesla shares. How do you adjust for that? Right? Because that's important that I can't imagine she doesn't know. If I know, she's got to know, right? But maybe not. Like I said, I might be the biggest nerd. Who knows? Let me see here. Any other questions, thoughts on home builders? I think that home builders is something that we want to buy, right? They were one of there's a couple home builder stocks. I don't know if I have a home builder ETF in here. Yeah, I think at some point we probably do use a home builder ETF. I just, like I said, I don't want to have all the ideas in something that I don't necessarily have control over. I cannot log out of my slideshow. I don't know what's going on here. Now, can I turn it off? It's not letting me turn it off. I don't know. We have to take a look. I'm not positive, but we're far away from that. We're far away on the home builders. Yeah, I think in the short term, the home builders have a hard time, right? Because they're going to have a hard time with labor again this year, just because there is a general shortage. And now you're going to have some percentage of them not wanting to work or they're sick, right? Because a lot of homes are built outside, basically. I don't think there's a huge reason that COVID impacts them over the summer. Well, clearly they're getting a late start. I've got a buddy who's a contractor. He'll hopefully build a house for me before he retires. And the profits there are going to be low. And here's the one thing that we're really seeing is new home starts, right, are way down. So, I think the home builders have to put in another bottom. But at that point, I do think there's a huge, I already thought there's going to be a housing boom in the 2020s, but think this through. What percentage of the population, especially since they don't work downtown anymore frequently, right, because they can live wherever they want if they can work from home, what percentage of the population moves out of the city centers and just says, I'm good being within an hour, 45 minutes. I only have to go in once a week, right? What percentage? I think at some point, I think the value of homes in the suburbs starts to really shoot up again. I think the value of homes in the city lose some of their appeal. And I think apartment buildings, I just think you're going to see people, I think urban sprawl is coming back. I think people are going to move further away from the city center if they know that they don't have to go into work every day, right? So I don't know what percentage to put on that. It looks like somewhere between 10 and 20% of the population will be working from home almost permanently now. Or at least 80% of the time, 60, 80% of the time. Does that go higher to 30, 40%? It could. I really think the towns that may not be actual suburbs, but the next layer, those second layers towns around cities. And I thought that was a sweet spot for a while, and I think it's even more of a sweet spot now. So take that for what it's worth. If you live in one of those second ring around a city, right, the next set of towns outside the suburbs, man, I think you might want to invest in those neighborhoods. Invest in those main streets. Those main streets in those towns that have 9,000 people or 12,000 people, those are going to be pretty interesting plays in the future, I think, because not only will you get the suburban crowd coming out there to, go to the shops that have outdoor entrances. I just think the quality of life, and if it's in a good school district, I think those are really going to take off. Another thing I think that you want to keep an eye on is the malls. I think Simon Property is going to cut their dividend in the next week or two. I think the stock's going to fall below 50, and I think they're going to struggle with, they're going to have to dilute, and they're going to have to sell properties. I think they avoid bankruptcy, but I can see that stock going down to between 10 and 20 bucks a share. So I would be real careful with thinking that that's put in the bottom, because I don't think that it has. So, man, I cannot get PowerPoint to shut. I figured that out. But I wanted to show that the chart on Simon. There we go. I actually have I'm submitting a pro article on Simon that's going to basically tell the hedge funds that I think this is going down in here again. It's going to go back it's going to round trip all the way to its financial crisis low. So, I mean, that's a lot of way down. So if you own Simon right now, get the hell out. I'm just telling you, get the hell out. It already broke support, and it's hanging around. It's gonna head lower. When they cut their dividend to next to nothing or nothing, who's gonna buy that stock? I'll buy it down here. Under 20? I don't want it up here. And I told you way back here that I thought it was risky. What happens to them in a recession? What happens to them in a borderline depression? I don't know if it's affordable to short Simon. That's what I have to look at. Am I just going to tell people not to own it, or am I going to tell them to short it? I don't know. I have to take a look at the options. I'm going to try to get credit default swap information on that whole industry. So, and speaking of information, last thing before we go. Forums. So my son has been updating this. Take a look at the various short lists of stocks, all sorts of research, just pick one, all sorts of updates. Ned Davis Research, CFRA, Reuters, Schwab, Morningstar, Argus, and there's industry reports too. Ultimately, we're going to have all the industry reports on their own thread. I gotta figure out how to put that other link in there. There's a missing link in the ETF section. So I'm going to start updating the ETFs, but we got a lot of research in here now. I already showed you that. Again, if you have an account at Goldman Sachs, Merrill Lynch, Morgan Stanley, whoever, please include their, find their thread, and put them in here. Let's just keep building a library, especially because then it's easy to compare what they said a year ago to today, right? So let's just keep on adding these. So I know a couple of you have given me Goldman Sachs research, BB Star. Yeah, just keep adding them. And I got it to be the most recent one at the top. I got a plug-in. So now the most recent one is here. Goldman Sachs on materials. Municipal. Yeah, I mean, look at this stuff. So there's a lot of people saying the municipal bond market's going to go to hell if the government doesn't intervene. Right? Well, pretty simple. So you just go like this. Go down here, put in your own thread. right? Update your PDF. That's all there is to it. Super easy. This is research from Hamiltonian Institute. Right? Choose your file. Easy, right? Piece of cake. Sometimes it's just a matter of scroll down and look. All right, let's call it a day. Have a great weekend. I'll get this up on an unlisted channel and I'll throw it in the chats. Take care. Fundamental trends for $99. If you're a margin of safety member, right? Go to tools. Tools. Swing trading add-on. Very simple. Explains it all. Try it for a year for 99 bucks. All right. Have a great weekend. Stay safe. Wear your mask.